As Wall Street tries to predict what the Fed will do next, how should you position your portfolio? Let's bring in Jim Tierney, CIO, Concentrated U.S. Growth within AllianceBernstein. Thanks for being here. So let's start there. How should you be positioning your portfolio?
If we do believe in higher for longer and a stronger economy, I think you have to start thinking outside of AI, who can benefit from that reality? And there are a bunch of companies that are benefiting from it and will continue, and they really haven't been recognized in the market yet. So I think there's a real opportunity.
Like what?
One is ADP. When you look at ADP, a significant portion of their growth over the next couple of years will come from float income. With an average duration of their portfolio over 3 years, it takes time for that portfolio to reprice higher in terms of the securities. And when that happens, that's almost 100% margin dollars that fall to the bottom line. So that's a great opportunity.
In terms of, the potential risks to that, as you look at the more momentum-based trades versus those that may be unappreciated right now, how do you see the risk-reward payoff looking, say, over the next 6 months, as we may see some reduction in rates, a different picture on the monetary policy backdrop? Does that dynamic shift at all in your thinking of kind of where you see underappreciation in the market?
I think earnings are going to be incredibly important in 2024. They weren't quite as much in 2023. Certainly, there was a huge spread between the Magnificent Seven and everything else. As that spread narrows, I think investors are going to start looking for what are the companies that have great earnings prospects. And you look at ADP growing 14 or 15% last year, around 13% this year. I think that's a great opportunity. You look at a company like Cooper Companies that makes contact lenses. They grew 10% last year, probably grow 12% this year. That's really strong growth, well above what the market's doing. And a couple of these companies have just been ignored so far. So to me, that's the opportunity.
A third company you like is Constellation Brands. I guess there's some skepticism that they're going to be able to match their growth numbers from last year, but you disagree with that.
I don't think they saw quite the benefit from the Bud Light share loss that everybody pins on it. Constellation has been benefiting from a trend of consumers buying more Mexican beer for well more than a decade. And I think that continues. The knock on the company for years has been their capital allocation. The fact that there are now some guardrails with a couple of new board members and an activist investor involved, I think means very positive things for capital return to shareholders, particularly as they have now delevered the balance sheet.
As we look ahead to the Fed, I know that you're focused on financials and specifically credit quality against this backdrop of higher for longer. At what point do you see things deteriorating to the point where the Fed may need to call an audible with regard to its tightening conditions?
It's a great question. And if you look at some of the credit statistics, we've seen some worsening of conditions, yet it hasn't become a full-fledged panic. And I think that's one of the things that the Fed has to be monitoring in terms of, do we cut to preempt any kind of worsening?
How are you thinking about the AI-related sector or the AI companies? Anything that has AI in its name seems to be attracting a lot of money. Are you chasing that trend or not?
We don't love to chase anything. We certainly have some names in our portfolio that are exposed to that. Microsoft would be an example. Amphenol would be another example, and Eaton would be an example in terms of they're all involved in one way or another and seeing really nice benefits from that exposure. I think the rubber is going to hit the road later on this year when investors ask who really will see an earnings benefit as opposed to just an exposure. And certainly, I think some of the disappointment last week with a company like Adobe in terms of not seeing that benefit immediately. I think more of that's going to happen in the market as investors become a little bit more critical.